Alrighty, this is a recap of today. I didn't realize the other day that this daily closed bearish, so I was ignored that the other day too. But let's just say we closed bearish on the day, alright. So we're bearish sentiment. Come over to the 4 hour. Yeah. I don't know where my indicator went, but add it back on. ICT sessions 1 just plots out the time frame, and then I turn the labels off and that whatever that gray is. I think this one, but yeah, that one. Yeah, relatively clean. So see, Asia already came down here and swept out some of this doji, which is an hour order block on a lower time frame. So we can see that this doji shows sell side or buyer pressure stepping in, and we can see that we've inversed this fair value gap. So I was bullish kind of on this day a little bit just because we inversed this, but at the same time we were at equilibrium of this range right here. So I figured we're just at, let alone equilibrium, OTE. And technically this London, my fish sticks. Alright, that can be fine. So this was a sweep of OT. Anywho, this is the previous day, bearish sentiment. This came back up, this, that, and third. You can see Asia swept this high right here, and then it continued to go down. It didn't close under here, did it? Yeah, it closed under that. So this was the meticulous breaker structure on the 4 hour that I should have been paying more attention to, that I actually did pay attention to. And then not only that, we had this 4 hour fair value gap right here. So bring it to the 1. Alright, so I saw that this was an hour down closed candle right here. So I'm guessing there's liquidity resting in here. This is also a 4 hour OTE or a OTE of this range. And then I saw this 6 o'clock close bullish. See all this pressure? It's a doji. It closed up. So I'm thinking, alright, we're bullish for at least right now. What I didn't pay enough attention to was once this bullish move happened, is that we came up into here, which was a 1 hour down closed candle. Or no, this is a 1 hour up close. 1 hour up close candle. And this was a 1 hour down closed. So longs off the down close, shorts off the up close. That simple. So we come here. The thing that got me messed up this morning, and I took this in demo because I wasn't sure, as I saw that this breaker structure right here, and I'm thinking, all right, we're gonna pull back to equilibrium, and then 1 minute inverse. What I wasn't thinking is, since this did technically put in a low right here, and this 5-minute candle closed up here, this is a whole alternative 5-minute range. So I just got to be paying attention because this is like an offering. It's like just, I call this an offering entry because it's offering you one entry. It is an entry. It's a 5-minute breaker structure, pullbacks into this 5-minute order block, and then took off. But I thought I was going to come at least down here and sweep these lows and do this 5-minute range, but there's no reason it has to, especially this one closing over this one right here. But so we come into the 1 minute, and you can see that it swept this fair value gap, and then it's even internally swept this low. So if I was paying attention to this as a range, I mean, it came down here to equilibrium, fair value gap swept, and then it even put in another low, swept it, and then it closed bullish when this one closed right there. So I kind of entered this move sketchy, but and I entered it on paper because I wasn't paying attention. So now let's switch over to our buddy over here, because I look at the forex charts, but I trade on the futures charts, of course, because You can't legally trade gold in the United States for some reason as a forex pair, but you can as a futures pair. So basically, they're probably trying to do something that has to do with you have to use the U.S. dollar as a U.S. citizen to trade gold. We don't want you trading the forex pair, or we want to make sure that you have to trade the futures contract so we can have more U.S. dollar flow. Because there's no reason that they'd make it illegal in forex but legal in futures for the same chart delivering the same price. But edit project, and then you could go use an offshore unregulated broker like some do, but I'm like, why would you do that? Like, just look at the FX chart. Trades by Side does that though, and he's of course money man. So, but something seems off about that. I want to trust $100 million in something that's unregulated. I feel like he's almost a scam at that point, but at the same time, he's my biggest inspiration, so I don't really care to myth bust that. Alright, so you see this is an easy move right here. I mean, our doji close up. You could have took it at London, which would be appropriate. I'm pretty sure that's what I did. But if you want to take it at the institutional level, well, the institutional level was this 50 level right here. So that's like the, alright. And at the same time, you could tell that it might want to draw towards that because of the hourly because of the hourly up close candle right here. So this is a 1 hour order block, and then I put it on the institution on the closest uh, institutional level near the price. So this candle opened up at 4745.0. The nearest rounded big figure number is going to be the hundreds, the 20s, the 50s, the 80s, and then back to the hundreds. So I took it at the 50s. If you would have held to the 80s, you would have been trying to go too far, because usually it bounces. From what I've noticed, is bounces from one institutional level to another. So it's going to scoop liquidity out of the hundreds, drop it off at the 20, or scoop from the 20s, drop it off at the 50s, or scoop from the 50s, drop it off at the 80s, scoop from the 80s and drop it off at the hundreds, or scoop from the hundreds, drop it off at the 20s, and then on, or back and forth. But so after I caught this move on paper, I actually placed a trade somewhere in NQ and I accidentally closed it. But so I was up a little bit or whatever, but good old me. For no reason, I decided to keep on going, so I just threw away some of my profits. But that's a small problem I gotta fix. Alright, anywho, so we're in this 1 hour order block. This one I really should have been paying attention, because this was like the A plus move right here. We're in a 1 hour order block. We have a 5-minute breaker structure right here with the fair value gap right here. And this is the 830 price. So we're pulling back over the 830 price, knowing that we're bearish. You want to be over the 830 price if we're bearish. You want to be under it if we're bullish. So we're in an hourly order block, and we're bearish on the daily, and we're bearish technically on the 4 hour. So we were only bullish right there. So I was like, all right, that's what I'm hyper focused on. But overall, we were bearish. So now the 4 hour, the daily, and the 1 hour I lined. This was the A plus move. So you can see it offered a nice portion right here. But the real move is if you would have held through all this chop. I mean, you could have took out all of this right here. But realistically, I'm not trying to hold through all that. I'm not trying to pay attention to all that. So this was the real move I should have caught earlier. And so we pull back into equilibrium as soon as we close past this fair value gap. Now on the Forex chart, switch back over here. On the Forex chart, this is why it's better to really just focus, like, for me personally, on one chart, because while this was all going on, I was over here looking at NQ and ES, but I really could have just been hyper focused just on this chart, and I would have interpreted, hey, Sugar Mama got a little work. But so yeah, so this is actually a swing low, a down close candle, and then an up close candle. So this is technically a swing low. So when we close past this, we've closed past this fair value gap and under a swing low. Over here on the futures contract though, that is not what I swear it's changing. Yeah, on the futures contract, that is not. That's a down close candle. So it just looks like we've inversed this gap. But over here, it's actually giving double confirmation. Anywho. Stop loss right here. First TP, take it as soon. Half of the position is only just to reduce risk. Because once we take off that 1-to-1, we don't have any more risk on the table. So that's 2 minutes later, we already took all the risk off the table. So the rest is just, whatever happens. So the next institutional level is the 50s. And that's in equilibrium of this range. So this range, and then this is the low that's in equilibrium of the range. And then not only that, wait, what the hell? Oh no, we already bouncing off the 50s. So now if we're going to hold to the next institutional level, that would have been the 20s. So we put this over here at the 20s, which is at right under a low in EQ. And it's institutional level under a low in the range that we just made right here. So if we would have held that, we would have almost got stopped out. We would have almost got stopped out right here. But since we have our low over, our stop loss over this initial pull into equilibrium of this range, we're good. So right here, it's delivered some orders. It swept too much liquidity to where it came back up. Now that's why you don't move your stop loss until you're at a 2-to-1. Now we don't get a 2-to-1 until what's 61 plus 61? 122. So really, we could have just got out of this move at a 2-to-1. That's what I'm going for now, or a 1.5 to a 1, because yeah, we would have got on that. Yeah, that would have happened, and that would have been no stress. But let's say we were greedy and we want to hold for more. Then we take it down here to the 20s. And either way, it would have worked out. But what you should have been paying attention to is that we were pulling into another hourly order block. And that it's not just all, okay, we were bullish right there. The 4-hour was bearish. The daily was bearish. And now we're pulling into a 1-hour order block. And you're over here paying no attention at all, brother, for real. Clean as day. You want to go run around, do NQ, you want to do this, that, and the third. Why don't you just look at gold and pay attention to it? Once again, don't pay attention to anything anybody else says, because nobody is anywhere dope as you are. Yo, why would you listen to anybody, yo? They're cool in their own ways, alright? But they're not. Nah, I'm clearly seeing liquidity being drawn to, swept, structure broken. It makes a lot of sense. The whole world buys gold. So that's why this market is booming in the Asia. This market could be booming in London. That's why the NASDAQ isn't really booming until 9:30. Because it's like basically like no volume or volatility or whatever comes in until 9:30. Yo, all these ranges are busting even in the shadow realms and during the sessions. So I'm going to trade gold. The person who wrote Trading in the Zone and The Disciplined Trader traded silver and gold. I mean, the whole world has been trading silver and gold for this whole entire time. So for me to even listen to somebody say, oh, well, gold's not something good to trade, I trade NQ. It's like, those are like those people who are like, Jesus Christ or Muhammad. It's one or the other. It's like, yo, you found it with Jesus Christ. I found it with gold over here, alright? You found it with Muhammad. I found it over here with silver, I'm not gonna lie. But I find it in NQ too, but it's just not my steez. And I think it's easier to interpret and read, and I just think it's easier. But anywho, that was today's recap. And then this is where we fucked up. We tried to take this. We saw this come down here and sweep on the hourly. And I was already up a little 250 or something. But yeah, so we swept all this liquidity. We swept this low. We swept this low. So I'm like, are we building liquidity to go longer, or what are we doing? We're just breaking down the structure to come in. So then we switch to the 5 minute. All right, you see that we've done all that sweeping. We've closed over this. So I'm thinking we pull back to equilibrium. We could take a long. Why would I even really do that when we were low key bearish on the 4 hour? There is nothing that says we have closed bullish. We have swept this fair value gap. That don't make any damn sense that I would look. We've closed bearish, yo. We closed under this low. We closed under this low. And then we came down here. We started closing under these opening and closing prices, yo. Then we came back up to equilibrium / OT of this range. So why would you take a long there? It really made no sense besides the fact that we swept all this liquidity. I was already up for the day. So why would I put more risk on the table? I've already missed one trade that was good. I missed another trade that was good. And then I accidentally I made one trade that was actually pretty good, but I closed it earlier on some lame shit. I got break even, and then I had the decision. Do I want to hold into the institutional level, or do I want to be a coward and be scary and hesitate out of my position? And I should have just stayed in it because honestly, I'm at a smooth. My last 3 weeks are all red, so it's like I might as well have just held and it's mitigated some of the losses. But getting better and better, it doesn't matter. I'm not really trying to have any major breakthroughs or anything. I'm just trying to make sure I learn from all my losses and yeah, not get frustrated. So that was my little recap. Just pay more attention, bro. Pay attention and don't actually pay attention. And just because you see a big run up to a draw doesn't mean that the move's over for the day. What if that run was the run just to get to where the actual draw liquidity was to do the actual move that was aligned with the higher time frame? Think about it. Anyhow, never give up. If you're failing, learn. If it's really not working, then there's obviously something wrong. So keep on going. Figure out what it is. The markets are an expression. They're trying to tell you. They're literally telling you everything that they're feeling, how they want to move. You just have to interpret it. Markets aren't out here to get you. The markets are out here to liquidate retail traders out of their position. But I already know who they're out to get. I'm just out here trying to ride the institutional waves as they liquidate everybody else out of their positions. So, markets are out to get someone and shit, not me. Alright. Dope.